Team, all right. Today, I'm really excited to be introducing Ryan Mullins. Ryan and I actually met working on a transaction together. It was one of the most difficult transactions I've worked on. Ryan stayed with me the entire time, which was fantastic. He's been working in credit. Most of his career started in investment banking, then moved on to credit opportunities, and today we're going to be talking about sourcing private credit opportunities. He's currently a principal at Elm Park Capital. And why don't you give us a little bit more of your background, starting with education? Sure, absolutely, man. Excited about it.
Yeah. So as Peter mentioned, we've done a transaction together. I started my career, though, in investment banking at a group here in Dallas, which is now Hilltop Securities, working across M&A, as well as capital raising and some kind of advisory work as well. And then I went to Texas Capital Bank, which the role was more origination driven, but wanted somebody that had a kind of a transactional background. And it was my opportunity to learn credit, but also be more client-facing and originating, which was exciting to me.
And what kind of clients are you looking for there?
So,
like how I guess speaking to how it evolves as your career moves on is, I think, very interesting for viewers.
Yeah, for sure. So I met an individual at the bank who focused most of their time around kind of private equity M&A, and so they were looking for someone that had a more, I'd say, transactional M&A background, kind of from modeling and just process to kind of come onto the team. But a big portion of the job was still going to be finding and originating new business, right? Sure. So the bank as a whole had a lot of lines of business. This one was largely focused on private equity, loans to facilitate buyouts or acquisitions or other kind of special situations, right? So it was great. I learned a lot about credit there, which we can kind of get into a little bit deeper.
Sure.
But then I had an opportunity come up at a credit fund, Elm Park Capital, which I'm currently at today.
And there you moved largely to deal sourcing, right? But you have the technical background, and you decided to really focus on deal sourcing. So talk to me about what you love about finding new opportunities and why you're okay kind of leaving more of the minutia behind.
Yeah, fair. So the role was a little bit of a blank slate at Elm Park, but very much was we want to have somebody organize and build out a business development function.
But I think that's interesting also. So you joined Elm Park when?
In 2016.
2016. So I think one of the things that's interesting is a lot of funds, you saw more specialization of roles recently in business development and in operational capacities. So I think you had to come in and build out a new role, which is really interesting, which today I think is far more common. You see business development roles that are structured and people know what they're doing when they come in. For sure. So maybe speak a little bit about like coming in when it is a blank slate and you have to build this thing from the ground up.
Yeah, no, fair. So, shout out to Mark for being a find what he would say the best athlete and kind of let them run their corner of the business.
Mark's the founder.
Mark is the founder of Elm Park, who I got the blessing to do this from.
Of course.
So the Elm Park, which we'll obviously run into, was going into a new fund, Fund 2, and I think they're sitting there saying, how do we scale the business? And sourcing had become harder and harder as the market became more competitive.
Sure.
So having a more organized approach made sense. But Mark, being how he runs business, wanted to have somebody to come in and kind of empower them to run it. So I candidly said, I don't really know, but I wanted to, I was very comfortable going into a firm where I was going to be much more origination driven, as long as I was still involved enough in transactions to kind of stay sharp on the market, which I feel like then in turn makes me better at business development, right?
Absolutely. Well, you can't do one without the other. You can't pitch the business without knowing how it works.
Exactly, right? Yeah. So when I came into Elm Park, I knew we were going to build out a business development function. I was going to spend most of my time doing that, and we were going to look for largely sponsor-backed businesses, and the rest was fairly blank slate. So I came in.
Sorry, speak a little bit to that. Sponsor-backed businesses versus what's the alternative? An entrepreneur-owned or
that's right. So within the private credit ecosystem, there's a lot of different strategies, but there's probably two primarily ones, which is in lending or investing in companies that are just founder-owned, which can be harder to source.
Sure.
And then there's kind of private equity-backed or sponsor-backed transactions, which you get kind of more scale out of your relationships when one business, obviously, or a private equity fund owns a lot of different companies and is always transacting, and you can build up a rapport with them.
Yeah, I think that's a huge point. You get to participate in multiple deals at a fund versus all of the effort into sourcing one entrepreneur-owned company. You close, and then you're starting over with a blank slate.
Yeah, so, exactly. So that might make a lot more sense from a scalable sourcing model on the equity side.
Sure.
and not to say it doesn't exist on the debt side, but it's a much longer sales cycle, and it's a much different approach than what I would say most credit funds will do.
Yeah, absolutely. And you want to know your partners, how they operate, what their due diligence sort of habits are.
Sure.
I think it makes it easier to deploy more capital if you have that kind of in your pipeline.
Yeah, it is a people business, right?
Sure.
At the end of the day, and there's a level of trust, right, that goes into any transaction, if it's with the entrepreneur, with the sponsor, or if it's growth equity backed or venture backed. So you obviously getting more reps with somebody makes it for a little bit more of a streamlined process.
So we have sponsor back. Talk about the criteria, what you're looking for, both in, it's really two-pronged, right? I think if you're in private equity and you're a control investor, you're really looking at the company and you're looking for partners. But in your role, you're also looking for who's the steward of your capital, right? Because they're going to be in a control position. Yep. So you're diligencing two parties at the same time, probably more thoroughly than a private equity group might. So maybe speak a little bit to like the criteria, what you're looking for, and what makes you think like this is a fantastic opportunity.
Yeah, for sure. So it has morphed over time for us. I would say we primarily underwrite the company, and then we'll very much diligence the private equity fund or sponsor, where it might be a little bit inverse for like upper middle market opportunities.
Sure.
So today we're primarily looking at healthcare and software businesses. When I joined, we were primarily looking at cash flow based opportunities and a little broader set of industries, but largely good free cash flow generation businesses that we were looking at them on a multiple of EBITDA basis, right? So business services, healthcare, some like legacy software business models that are a lot more license maintenance driven. You could look, and there's a variety of other, we've looked at some food and beverage.
Cash flow and highly focused on recurring revenue.
Highly focused on, I always thought of us as business model focused, but willing to jump in on situations that might not be perfect for a bank because they're a little bit.
So speak to that, because I think that's one of the best things y'all do is you find sometimes what a lot of groups would think are red flags and find how to get comfortable with them.
Yeah, right. So
that might be an inappropriate way to describe it.
Yeah, right. So banks are highly regulated. So they have a box around what they're able to do. And then credit funds or shadow banking or whatever other term you want to use has come in and kind of filled the gap.
Media normally uses.
Yeah, exactly. Kind of post-financial crisis that have a lot more flexibility, but are also not lending out depositors' money, right? So a lot more flexibility. So when we started, we were a special situations or credit opportunities fund that couldn't compete with a bank from a cost of capital perspective, but could roll up our sleeves on something that was a little bit tricky or complicated.
So do you have a good example of that? Honestly, the transaction we worked on is a pretty good one.
I mean, and it dovetails a little bit to what we do today, or a big focus area of ours, which is software lending.
Sure.
Right now, that ecosystem has evolved, but
massively.
Massively. Yeah.
There was a time where it was considered a terrible space to be in.
Yeah. No, you're right.
Which is really wild.
So I joined Elm Park about 6 years ago. About 4 years ago, we made our first kind of ARR loan. And so we're looking at a business that was small.
ARR is?
Annual recurring revenue.
Yeah.
And it was a business that is, high 80s of gross profit and almost 100% customer retention, and was a mission critical vertical software that was focused around customer relationship management. And that was our first time to look at the business and say, hey, this revenue is so consistent, and a private equity buyer could probably buy other things and create a lot of equity value. But we should underwrite around the recurring revenue because that's how equity investors are valuing the companies. Now, we were not the first to do this, right? But it was a lot less common, especially for earlier stage businesses.
Sure.
So that was a pretty strategic pivot for us.
And it's now become widely accepted.
It's becoming more accepted in the market as a whole. Not everybody does it, and I still think we get better risk-adjusted return there just because of competitive dynamic is still in our favor. But that's an example of an area that is proliferated, but at the time was still pretty rare.
Sure.
Right. Other situations that come about are one-time costs or situations that make the cash flow story look lumpy. But if you kind of back out that one situation, if it was a supplier issue or a big customer loss, or there's maybe some kind of litigation that kind of levels out that story. But for a bank, they want to see consistency and historical cash flows, and that's why they're going to provide cheap capital. So we are a little bit more expensive, but hopefully provide flexibility or understanding for a unique situation.
Yeah, if there's a narrative you can wrap your mind around over the last 3 to 5 years that makes it look more consistent, you'll deploy, whereas other people might be, just viewed as too risky.
Yeah, that's right. And so, as we were talking a little bit earlier about the ecosystem, could maybe elaborate a little bit. The private credit market has now exploded in the last 6 years, right? Yeah. And there's a lot of groups that now can do close to bank-like pricing for fairly clean transactions. So we've had to kind of further evolve, and it's core to the business development side of the house, being me and others on our team, thinking through what is our kind of go-to-market. Let's step back going into a new year and think about who do we talk to, what do we set, like what do we pitch them on, how do we message that, how do we message that we're different, to hopefully just get the call, right?
Sure.
Because there's an infinite number of people that you can call on, even if you don't call directly to a company. If it's investment bankers, other lenders for referrals, different types of private equity groups, different sizes of private equity groups.
So before we go into who you're calling in your network,
sure.
Wrapping up kind of the evolution of what you're looking for, you have cash flow early, then revenue. I think throughout that, special situations. Mm-hmm. And where would you say your focus is today predominantly?
Yeah, so it's really, there's we spend the most time are software recurring revenue. The second, it's been a bigger focus of late, be kind of called fund solutions, which is looking at if it's an old private equity fund at the fund level, so there's several assets left and there's a need for capital. It could be to make an acquisition, it could be to pay down debt at the company level, but they don't want to or are not able to get financing at the individual company level. There's a variety of other use cases.
So just to make it clear for people watching, that's raising funds at the fund level so that then you can then...
It's lending money to the fund level to drop down to
the portfolio companies.
To the portfolio companies, right? That could be to buy a new portfolio company within a fund, or it could be for some kind of uses at an existing fund, an existing company within the fund.
And how new is that practice for you all?
I'd say it's probably we became exploring it 2.5 years ago.
Okay, terrific.
And I knew some people that focused exclusively on that, had funds raised around this type of fund solutions or fund finance.
Sure.
And I found it interesting. And I'm always been encouraged and have to think about what's the next iteration of what we're going to do, because as opportunity sets close, you have to kind of find the next one where the competitive dynamics are going to allow you to get good risk-adjusted return, which is our job, right?
Yeah, absolutely. Nothing gets arbed out faster than in finance. I mean,
and if you're right...
As soon as you have an edge, it gets arbed out pretty quickly.
Yeah, if you're right, it's going to get, people are going to do it.
Yeah.
Our money is as great as the next guy, and so as much as we have an expertise, other people can replicate it, like you said, much easier in financial markets than they can in some other kinds of...
So then you really need to be calling on... correct me if I'm wrong, but management teams, private equity groups, and I guess private equity groups with two different perspectives, whether or not they need it at the fund level or for their portfolio companies or new acquisitions. I guess it's 3 angles.
Yeah, right. Yeah. And so the more tools you have, the better. But also the more tools you have can complicate the message, and something I think about a lot.
That's interesting.
Not trying to be all things to everybody, but not being so narrow that you prohibit yourself from seeing deal flow. So how do you go to a private equity guy that you've known or gal and talk about all that you can do for their current latest fund and on the primary side, and then also throw in, oh, hey, we could lend money to your old fund to drop, it can be complicated. It can get confusing, just like I probably confused people when I was talking about the fund level. And it is.
But you want to leave people with a cocktail bite that they can kind of circulate. I mean, like a sound bite.
Yeah, for sure. But it is, I think a lot about messaging.
Yeah.
And...
Oh, it's hugely important.
It's hugely important.
Especially in initial phases.
Yeah, I mean, it's great to think that somebody's going to remember you based on one conversation, but the reality is, a lot of lenders are calling on, the sales cycle takes a while, right? Even as our strategy has evolved over time, it takes sometimes 2 or 3 interactions for someone to really remember what it is you're doing now, if that's size or
absolutely.
we're doing more ARR. I mean, I
think especially in our industry where you're talking to so many people, you're looking at multiple transactions at the same time. You have different capital partners, you have different Q of E, accounting, you name it. I mean, every time you work on a transaction, the team goes from 5 people to 50 in an instant. So messaging's critical.
It's not static, right? We're largely calling on private equity groups, and their strategy isn't static based on types of company or size, situation, and our investment thesis isn't static, and so it's moving at all times, and then the market is moving as well from a debt and equity perspective. So it's a hamster wheel of staying in front of people.
Yeah.
Right.
So with let's say within a fund, how many private equity groups do you think you're working with? And do you even think about it that way? Is that like
yes, we think about this, right? We would love to get more like repeat business. The nature of what we do is a little bit more situational capital or more expensive capital, and therefore we work with more groups in a fund than some other groups that have more a lower cost of capital.
Because if it's a market deal,
you're
looking for more upside.
Exactly.
Yeah.
Right. And if you have a market, I call them like a market-facing cost of capital, you can build up, 10 private equity relationships and build a level of trust with them, and that's a good product.
And you just deploy on every deal without really.
Yeah, maybe not every deal, but maybe you're hoping to get a look on every deal, and maybe you're 1 out of 3 deals, and they spread the love a little bit. But there's a level of trust in you. That they're going to pay you back. There's a level of trust that they know what they're talking about, that they're going to support the businesses if, say, I don't know, a global pandemic happens and there's a need for kind of equity infusion of capital.
But you're looking for that additional spread, which requires kind of unique circumstance.
Yes. So sometimes there's a lot of that in the market. Sometimes there's not, just based on kind of the macroeconomy. But in the meantime, we have to kind of find like interesting seams, like software lending that we can generate good risk-adjusted return at our pricing. So we have to work with a lot more people.
Yeah. So let's walk through that. So you have more of a shotgun approach than a targeted approach, or how do you think about your strategy when you go out and you want to fill your pipeline?
I would say that as well has evolved over time, and I hate to use that for every one of your questions, Peter, but I very much took a boil the ocean approach when I started. And over time, as we became more industry focused, saying, hey, we will deal with the complexities in healthcare. You find unique situations there. If it's reimbursement, risk driven, or whatever that we think are underwritable. And then the software and the recurring revenue stuff, where I started saying, hey, this is where we can win deals. This is also where I like the opportunities. Like I try to think any good business development person should think about what they like as well, and not just what they can get approved.
So go back a step, though. That's such a huge part, like where you can win deals, especially when you're in biz dev. Anytime I've had to source something in a particular space, and I knew we just absolutely would get knocked out of a process, it just fully crushes you. It's like if you're in those one after the other, you're just losing deal after deal. It's really tough. I mean, you want to know where your niche is and where your strength is, so that you can assign some sort of probability to winning.
Yeah, for sure. So I learned that somewhat the hard way at Elm Park. So out of the gate, I think I would chase a lot of things that we would do, but we weren't getting the nod. The conversion wasn't great. And the conversion is never really great in this business. You're always going to have to see a lot of transactions, no matter if you're equity mezz, senior debt. But I started to kind of think about triaging deals into really 3 categories, and I think it's been very helpful for me and for the firm, which is not interesting. Just if that's because I don't find it interesting broadly, or it's not interesting for our mandate.
Like your immediate kill bucket.
Total kill. Like something that is industrial, manufacturing business. For the person that knows that, it has an angle there, but we don't. So I'm like, it's just like not fit. And then the other side of the bucket is, well, seems like really great business. It's a very reasonable ask. I don't think we can win this. How do we kind of hang around the hoop, be helpful, spend enough time on it that
at the yield you're looking for, right?
Exactly.
That's always the equation.
Yeah, exactly. Or sometimes we try to be creative and say, well, what if we do a little bit more debt, or there's some other bell or whistle that we can put on our our debt facility to maybe win.
Sure.
But you can typically have that conversation with the sponsor, say, hey, like, I do like this business. This is interesting. I vetted internally. And you have to do some level of work on it. But based on where the market is right now, this is probably where we're at. Here's where the market probably is. But I'm glad that we engaged. And if something comes up that changes the transaction
You want
dynamic.
that second phone call.
Yeah, we want to be the first last call.
That's right. Yeah. Yeah, absolutely.
Right? And people appreciate that.
First, last call.
Yeah, right. I mean, honestly, what I found in the industry broadly is like everybody's too busy.
Yeah.
And so having a level of candor with people and being
appreciated.
efficient with their time is appreciated.
Absolutely.
I don't
Always.
take the approach of, hey, I want to show you I worked hard on it. So here's like a 2-page question list, and let's spend 2 hours on it for me to call you back and say, hey, like that very clean transaction, we would price it 400 or 4% wide of where I know the market is.
Yeah. Right.
You don't get a call back after that.
Right.
But if you just say, hey, like I've done my work, let's have a 30-minute conversation on the business. We discussed our internal pipeline, and we could stand behind it, and we could do about this much around this pricing, but I know that's not where the market is. Call me back. You build a good rapport, and so people think of you.
I think upfront explaining why you're looking for that additional spread. We tolerate more risk, or we're willing to wrap our minds around things that maybe the rest of the market won't. And
Yeah.
that's, the way you present the reason you're looking for additional spread, I think also is appreciated if it's explained correctly and straightforwardly. Certainly.
Absolutely.
Yeah, surprising people with a massive warrant or something never.
Yeah, it doesn't help.
Yeah.
And then the third bucket is the 10% bucket is this is actionable in the sense that the deal is signed up or the sponsor you're working with has a high degree of conviction that they can sign it up if that's a new platform, or if it's an add-on, or the bank is very much knocking on their door to get paid down if it's a more refinancing-driven transaction, whatever that case might be. But it is first actionable, right?
Sure.
So, okay, worth a lot of resources. I like it. I think I like it. For us, it has reoccurring or reoccurring drivers. Doesn't seem like there's something fundamentally wrong with the business. We're not turnaround investors or loan to own or somebody that wants to take, I would say equity risk. But does have enough nuance that it's not going to be priced very low.
Sure.
And so saying, okay, that's interesting. And that's where you really spend 80% of your time.
Yeah. On the 10% that you're sourcing.
Yeah.
Yeah, absolutely.
Yeah. I don't know what the exact percentage is, but
that's probably right. The Pareto rule probably applies.
Yeah, exactly. Right. So, and then.
So hold on. So those are your three buckets, and you're coming across these opportunities. Are you going to conferences? Are you moved to New York City for a brief
I
period
did. Yeah, that's right.
Specifically to source new opportunities. So talk to us about your whole process, the way you view it. Like, do you need to be at conferences? Do you need to be on the phone, mostly email, in person, a different city?
So we deploy a geographic coverage model, which I think most people will do that. I think it makes sense because even in post-COVID times, it's hard to replace in-person interactions. I've tried to be data-driven about where we spend time and why we spend time there. I certainly could look at the trends and show you that people that I've never met in person, I see less deals from. If I thought through all the transactions that I've sourced that closed at Elm Park, pretty sure I've met everybody in person besides I can think of like one, right? Now that doesn't mean that you can't manage a relationship, via Zoom or via phone, but you have to think through how good is a relationship, how often we need to see each other.
I also think, this is one thing I always thought about. The trust and the reputation is so important in this capacity, because if you're relying on capital partners and you're days from closing and someone pulls when they've told you they're there for you, your entire transaction falls apart. You have several $100,000, if not millions of dollars in dead deal costs, and it's because a reputation a relationship fell apart at the last second. So I fully understand why you need people to know you as well as possible and know your firm as well as possible.
Absolutely.
It's huge.
No, it is. So it's really two parts of that in my view. That's the relationship that you build, and then the relationship that or the reputation maybe that your firm has, right? It kind of takes both.
Sure.
Because people often want to deal with you, but also want to know that your firm will stand behind it, right? So it's a little bit of like a both. They trust you, but they also are going to go diligent, and they're going to diligence you.
They're going to meet those people.
But then they're going to be asking around of like, hey, what do you know about these Elm Park guys? Are they
Absolutely.
good? Are they smart? Are they going to, they going to leave me at the altar?
Yeah. To your point on not wanting to be a loan-to-own shop, if you have a reputation for being that kind of group,
you
when
better
those
own
calls
it.
are made,
Yeah, you
you're
better
out.
just own that.
Right.
And if you try to go be something else, people find out. Like,
That's
it's
right.
just, that's obviously is a term that can sometimes be used in a derogatory fashion, but it deserves to exist for a certain type
Sure.
of transaction, a certain risk level, right?
Right.
People that are prepared to take equity risk. Well, it's not us, right? So,
Right.
but yes, if that is you, people will find out. Right?
They'll find out.
Yeah. So, the evolution of my business development efforts have changed over time. I used to go to more conferences.
I think everyone starts on the conference circuit.
I think everybody starts on the conference
You gotta get
circuit.
as much exposure as possible.
For us, it's ACG.
Yeah.
You can meet a lot of people very quickly. It's a good way to kind of meet a lot of people, or for me was
stack business cards.
Yeah, stack business cards, follow up, get them in the system, have a reason to call them next time you're in their city. Also, send a list to everybody at the firm. Hey, who can make a friendly introduction, right? Like, that's a great way to kind of, you have to take I think a very holistic view of business development. At least we do. We're a small team. So,
Sure.
Over time, I still do a few that are more the ACG conferences. And
ACG being kind of the biggest in your
yeah,
space,
the
correct?
Association of Corporate Growth, right?
Yeah.
So it's the largest kind of deal community or private equity ecosystem conference, right? It doesn't
Sure.
bring the real like the growth equity or venture crowd, and it doesn't bring like large buyout funds.
Sure.
But the kind of lower middle market, private equity, some kind of growth equity, and kind of related parties being the lenders that are around those, like us, the banks that like those types of transactions, lawyers,
providers,
accountants, everybody
everyone.
else, right?
Yeah.
Yeah. And it's nice. So I do a couple of those a year now. Over time, as the business development seat has proliferated everywhere, sometimes a private equity fund has a business development person that is a good contact for me. Sometimes they're somebody I like a lot, but is never going to be the right contact
Yeah.
for me. But they are often the ones that will go on a solo basis or in conjunction with others at the firm. So how do you think about coverage of, okay, I met with somebody, but did I meet with like the right person? Who holds the lender list? Sometimes there's somebody. Sometimes there's not. Sometimes it's just by deal team. Every firm's
Explain the
different.
lender list when you're working on a deal.
Yeah, so when you're covering sponsors a lot, everybody approaches how they raise debt capital as part of the transaction differently. Maybe to start at the larger firms, have a debt capital markets person or team
Sure.
who is your
You're saying
best.
the private equity group has
Private
their
equity group
DCM
has a
team. Yeah.
debt capital markets person who is arranging financings for every deal. They're your best friend and your worst nightmare all rolled into one.
Right.
No, but I have a lot of good friends that are debt capital markets leads, and you build good relationships with them. But their job obviously is to get the best deal, but is also to call the right people for the right
Right.
transaction.
And you're trying to find that person at the private equity.
Yeah, which they normally want to speak with you.
Sure.
Then going down from there, then you might have a group that doesn't have a debt capital markets person, but they have somebody that is like manages
And when you're
lender
saying
relationships.
Down from there, generally you're saying in fund scale size.
I would say
Is
in
that-
professionalization of the capital markets function.
Okay, perfect.
Right, it's largely by size. The
Yeah.
bigger funds typically have so many companies, and their people are so busy that it makes sense.
But it's possible at
Yeah.
smaller funds, to your point, to have the infrastructure.
Yeah.
It's sort of more.
Some people have it, right? But some people probably it's not a full-time job,
Sure.
but it's
Part of what they do.
John spends 20% of his time meeting with lenders. So if you ping somebody else, they're like, John holds the list, or John manages lender relationships, right? Okay. So you want to obviously be good with John, but maybe, Peter like also runs his transactions. Normally we'll call John, but he probably has a couple guys that he's known a long time, guys or gals that he's going to call. So it's a little hybrid, but that's but then you at least have a primary point of contact, right? You go to Los Angeles, like that's the number one person you can meet with, because you can't meet with everybody at the firm.
Sure. You're building effectively, once you go through the conference circuit, you're building this kind of Rolodex, to use a massively antiquated word, Rolodex of DCM guys, debt capital market guys, or whoever holds, quote, the lender list.
Yep.
And that's kind of your call list or your email list.
On the private equity side,
Sure.
yes. But there are some very, very real firms that are relevant that every team does it differently. It's driven by the kind of principal or VP that's kind of leading that transaction. Or at times it can be the partner on that has, a long-standing relationship with, so and what X firm or X person. And they're going to get like the first look.
Yeah.
I mean, it happens, right? Why would you not, right?
Right.
And then at times, the kind kind of private equity business development professional. Sometimes I've seen it more lately in the last 12 to 18 months, is also now organizing like lenders, right?
Oh, interesting.
Not I mean, I'd say maybe 1 out of 5 firms.
Okay.
That, hey, like I update the parameters in the CRM. I kind of keep that list, and everybody pulls the list, but I'm the one that's like, they're going to ask, who's 5 people we should call on this deal?
Sure. So they're managing all new relationships, inbound deals. And,
Yeah,
and
I mean,
capital
I
partners.
think that kind of makes sense,
Yeah.
but it just depends. So I take the approach from a business development perspective of just asking people. Like, even if it's somebody that we find like at a conference, I go meet with, and they're not going to show me deals, and I'm not going to show them deals.
Yeah.
But I at least be like, who's the right person to know? How do you guys think about like organizing financings for your companies? I mean, it's okay to be direct as long as you're nice.
Right.
And so I think I learned that over my career of, sometimes just ask if you don't know what the answer is.
Constantly.
Instead of trying
Always.
to guess who the right person is to call.
Right.
And people understand. Like, it's fine. They're calling on somebody else trying to generate deal flows. They're not offended.
Sure. Always.
Yeah.
So, okay, so conferences and on the private equity fund side, you're looking for these individuals specifically.
Yeah.
And where do you branch off from there?
So last point on the conference, and then I'll talk about the kind of other avenues. Conferences obviously bring a lot of investment bankers who are primarily, or private equity funds are primarily there to meet with.
Yeah.
Right? I'm sure
Yes.
they'll take some lender meetings, but they're primarily there to generate their own deal flow.
Right.
So I don't typically ping investment banks at conferences because there's normally
They're hyper-focused.
three investors, for every investment banker, so their calendars are full.
Yeah.
So I will meet them elsewhere. And then, there's obviously the benefit of having more.
So are you contacting them directly or how do
I
you go
used
about
to.
doing this?
I used
Yeah.
to call on, it's called sell side or M&A bankers pretty often. And they used to bring us into a lot of transactions. As the market has matured and as financing is plentiful in a lot of ways, they don't need to get lender reads as often.
Yeah.
And at the end of the day, the ultimate buyer who wins the auction is more likely to kind of bring in their own
capital
their own
partner.
bench of people.
Sure.
Right. Now, I highly encourage people, bankers, like, hey, there's something that's a little weird, a little esoteric, especially if it's software or healthcare. You're not sure if it's financeable, which will very much determine what the TV or transaction
Yeah.
enterprise value is.
That's what you want to be known for.
Yeah,
That's the call you want.
Yeah, exactly. And they want to know, should I take this engagement? Because if it's not financeable, it's probably not within the
not
valuation expectation of the owner. So, but that's not a big source of flow. I started spending more time with other lenders, honestly, and that's become a very, very good channel. And that can take a lot of different shapes and forms. If it's just referrals, finding people that, hey, we'd like to do 10 to 50 or 10 to 100 million now, in the software world. Who are the guys that do like 1 to 10, stuff that's a little bit too big for them? I should know them and vice versa.
Sure.
And, you kind of pay it forward, right? Stuff I have people that I try to send things to that I, at a cursory review I like, but are just too small. Okay, like I should send those, or just it's
Absolutely.
not a fit, right?
Yeah.
So that's become a big, and I can meet with them at conferences as well. But over time, you talked about like kind of boil the ocean or focus. It's become, as we become more focused, my business development efforts become more focused.
Yeah.
And
I think that's natural also. I think that happens.
some was by
right?
design, and
Yeah.
somewhat it was just, hey, I cover a lot of people, and here's the people that are showing me deals, and I'm going to just continue to kind of manage those high value relationships.
It's sort of the benefit of specialization within sort of an industry asset class. Whether or not a deal is sort of straight down the fairway or a little bit more difficult to wrap your hands around. The more you specialize, the more you meet the people who work on these deals, and the more that just compounds that relationship and that network grows.
Yeah, absolutely. And so now I spend more time going to the cities that I cover.
Which cities do you cover?
So I cover LA in conjunction with somebody else at the firm. I cover San Francisco and kind of related area, Menlo Park, Palo Alto, New York with several others at the firm because it's just so big. Austin, because I went to school there.
Yeah. So what's a day like? You hit one of your target cities. How many days are you spending there, and what's a typical day look
that's
like?
good. Yeah, so Some of this has changed during COVID, but not
Yeah.
as much as I thought
Fair.
it would, honestly. So I'll typically do 2 nights. I'll fly in the morning. I used to take the absolute earliest flight, and I'm a little bit nicer to myself. And so you kind of have 2.5 days, to kind of fill up your calendar with as many meetings as you can. My general benchmark is like 13 to 15 meetings.
That's impressive.
It used to be, if I'm speaking candidly a little bit more, hey, look, I had 17 meetings. Sure. Now it's a little more, hey, I would rather have 13 high quality meetings or meetings that are like very relevant or firms that we've been trying to get in with or whatever,
Real traction.
right? Than just putting in a number so I can show it, right? That's
right.
just natural, I think, elevation.
Role
just being a deal
progression also.
professional.
Yeah,
Yeah,
absolutely.
exactly. So, you get in and, there's a little bit more art than science about, planning a business development trip, but it takes up a lot of time. I've started to get back on the road since August. I think next week I'll be in New York. It's like the 7th, business development trip of the fall. And
Oh, great.
it takes up like a lot of time.
Yeah.
You got to reach out to a lot of people and track that. And
There's a lot of planning.
there's a lot of planning, and it is my least favorite part of the job. But it's part of it. It just is what it is, right? And planning the meetings and being flexible to people, and you're the one that's obviously requesting the meetings, and so going out of your way to meet with them and under what they're comfortable with or what is easy for them, but balancing that with not completely screwing yourself. I can't go from the airport to check into my hotel in San Francisco up the peninsula, go have a meeting, and then go have dinner with somebody in Palo Alto. I mean, it's like that becomes not.
No,
a
you
good
have to
use
be
of my
like
time.
super strategic about all.
Yeah,
I mean, they have to be within like a geography as you move through a city.
Yeah.
Otherwise, you won't make them all.
No.
It's impossible.
And so if you do it that way, you'd probably be much better to never have gone that day and just emailed 50 people that you had, and then taking a shotgun approach to that is probably better.
Sure.
So it's a little bit of a balance, and then kind of doing 2.5 days of meetings and flying out but
So how many, whether days or hours of prep, go into 2 days of meetings?
It's probably, what do you think? The initial, it's probably like 6 to 8 hours is my guess, right? So the initial, like pulling everything, seeing who you met with last time, getting that list, kind of prioritizing it, and then, I don't just copy paste the same email to everybody.
Sure.
I mean, I obviously don't
That
just
would
write
get
a
exposed
custom
quickly,
email
right.
to everybody.
Yeah.
Even I'm going to deny that, but you want, obviously it's a balance, right? People you know very well. Hey, I'm going to be in town. Want to grab a drink? People you don't know that well, but you've met with. You kind of want to kind of tease them, or like we've closed 3 healthcare deals this year, or whatever, to kind of spark their potential interest, or. If we've had firm changes, kind of tease, there's been some changes at the firm of our parameters or other things like that. And then people you don't know, you really have to try to find the right person on the website, really like understand what they do, and then try to find some connectivity. Yeah.
Try to find a connection somewhere in place already.
Yeah, maybe you've invested in a similar company, and you can see most private equity firms, you can see their portfolio company, companies on the website. Or maybe somebody that they know, or we overlap well from a size and industry perspective, right? Whatever that is, right? But you also can't spend 30 minutes to an hour researching people you don't know at all. So it's...
Well, there's also the problem, if it's purely a cold email, they really don't have a problem canceling on you last minute. If they're in the middle of a deal or something.
No.
And so you can't have too many of those in one day because you could end up...
Oh, it's definitely happened.
That's definitely happened to me.
It's definitely happened. I've shown up at offices, coffee shops.
Yeah. No, they
all over the
completely
place.
forget, and you're in a different city, and you just feel like an idiot.
Yeah, and you do have to just kind of like realize it's not personal. Like, don't take business personal, right? Like, you can't get offended by that. It's just is what it is. But then, guess will probably meet with you next time you're in town. I mean, I've had a number of these meetings get canceled. You fall for a call, then and some people I can look back because I will often reply on a last email. One, to try to not hit spam filters, but two, just understanding that. This person might not remember you because everybody's so busy in this industry, But then if they could say, oh yeah, like I tried to meet with this guy before, I had to cancel, or like, oh, I told him last time, well, next time you're in town, and you follow up on that email. Like, it's like kind of being organized.
Yeah. So would you say...
We'll get you those meetings, and then over time, some of those people become very good, relationships.
Right. Sometimes out of guilt, but yeah.
You got to take whatever it takes, right? Yeah.
So would it be fair to say the process sort of evolves from boil the ocean, large conferences, as many contacts as you can get, and then you're slowly refining towards kind of geographic targeted cities with sort of professionals you know very well, and you're kind of adding to that incrementally each time you're in each city? Or how would you phrase it
fair.
best?
I mean, different groups based on their strategy, it might be different, right? Like if you are a business development professional at a life sciences only, royalty lending company, you might have like 100 people that are like, this is who I cover, right?
That's it.
Or if you're a sponsor coverage lender who is only going to do buyout financings that are clean, and you have a competitive cost capital, but can write also very big checks, you're going to be like, here's the 40 sponsors in my market that like really meet that criteria on a regular basis. Like I'm going to just spend time with these people only, right? Probably out of the gate.
Sure.
But we have, when you're part of like an opportunistic credit strategy, things change and morph over time more, and where there's opportunity or change. So it ends up probably being that way directionally. And another part of that equation is I spend more of my time today managing the deal flow that just comes in if I just didn't do anything, right?
Yeah.
It's just operating leverage of having, a lot of relationships.
You have a brand, you have people out there
Yeah,
that have done transactions,
and
press releases go out.
We talked about it a little bit earlier, but everybody's different. Or each firm is different. Some people bring in a transaction and immediately send it over to a different team.
Yeah.
Some people are a little bit of a hybrid like us, where it depends on capacity and situation. I always like having somebody else's eyes on it as well, and we'll work on it in conjunction. We're kind of in the middle. In other firms, it's like they don't have a business development dedicated seat, but everybody's expected to do BD, and so everybody brings in their own transactions and works them from start to finish, right? I spend an increasing amount of my time of that 10% that come in. Higher percentage of those now than 3 years ago are just because so-and-so knows me pretty well and calls me on something. And so as much as
knows when to reach out.
I'm trying to continue to do as much outbound as I used to do, but I bring in more interesting deals and issue more term sheets now. That's just not based on right place, right time. That's based on like after 8 meetings with somebody over 6 years, they actually know when to call, which is good. Yeah.
So this might put you on the spot, I don't know, but do you track the funnel pretty closely from NDA to down to term sheet, down to execution? Yeah,
that was a big part of me coming in to Elm Park 6 years ago was, well, we have Salesforce, but it's just a wasteland of nothing, of some contacts and we have all of our deals that we've ever seen in this big Excel file, and very good, like tracked very well, but those didn't cross, and I didn't know who knew who, and so I did like a couple. I think I'd only done 1 or 2 trips. Then I'm finding out that so and so knew this person, and I'm calling them, and they're like, "Oh, I know Kyle," and it's like, "Oh, I should probably know that." I know that Kyle kind of covers Chicago, but this firm also has another Chicago office. Yeah, it just, Kyle knows other people. Like he ends up working on other deals or whatever, right? So I kind of put in a CRM and a process around, okay, there's a responsible party.
So what are y'all using for that?
We're about to switch to Deal. We're in the process of migrating to Deal Cloud, which is
from Salesforce?
From Dynamo, which is another. So it's another asset management specific. Deal Cloud, I think, just kind of fits what we need to do a little bit better. But the first layering that in was, okay, first we have all these deals in an Excel spreadsheet, and we have all these metrics, and we have who was a source and who was a sponsor and who was the intermediary. But I can't see that in the system. So when I go call an X private equity fund, I have no idea what we've seen from them, and that's not going to make me very good at my job. Right. So we were able to get all that into a system.
So explain that. If you're calling on anyone, you want to be able to pull them up and see on one page deals you've looked at with them, what they do, what their specialty is, and how you can respond to it as quickly as possible.
The more the better, right? But you can't. I want to make sure that the stuff we're putting into the system, we're also getting use of getting out of the system. But I, at a minimum, want to be able to see, okay, who covers them, where do they have offices, what deals have we looked at with this person, if they are the source or the sponsor or the intermediary, or ultimately if we lost the deal, if we can find out who we lost it to, that helps us from a market intel perspective. And I want to be able to click through those deals, and I want to be able to see notes over, we're starting from, when we put it in day one, we're like, okay, in a year we're going to have a lot of like, it's going to be great. Now, 5.5, 6 years later, we have probably too much data in there. And so then you can have a little bit more informed conversations, right? And so I can look on the app and see, okay, here's what we've looked at recently. Here's my or somebody else's recent notes. So I can just have a more informed conversation, right? You have 30 minutes or 45 minutes or whatever to kind of make that impression if you can like, there's different ways to do it.
Yeah.
But one of which is, hey, like I remember we looked at this deal and referencing that, or like, hey, like I remember last time. You can even be stuff in the notes that's more personal.
Right.
You know, like
oh yeah,
I remember,
always, absolutely.
You know, I don't have the great memory, but I do when I read the notes. Like, oh yeah, I remember something. He just got married, or you know, whatever.
So then, do you also track the funnel by, you know, number of NDAs signed to get to kind of a look at the deal, to get to issuing a term sheet, to get to a close?
Yeah,
and
sure.
Do you know what those ratios are, or what's important to you all that you track internally?
Yeah, so that was the kind of the relationship management side. Then you have the pipeline management side of the house, which I think by this point most firms have a CRM and are tracking this in some form or fashion.
I think absolutely. You have,
I mean, if you're not,
you definitely have both.
Wild.
You're definitely looking at,
and they should be in one system. They should talk to each other.
Yes.
On the pipeline management side, we kind of have three categories that we're looking at when we have a pipeline meeting, which is like currently underwriting, which is a deal that is we have one exclusivity on, and we're marching towards a close, but it's not closed yet.
Sure.
Then there's term sheets out, which is like, okay, like
hopefully,
that's where we spend most of our time. And then it's under review, and that takes a variety of forms, right? Some of them are actionable, some are not, some are interesting, some are not. But they are, a deal came through, somebody had a request for capital, it'll make the pipeline.
Yeah.
From there, deals can move to a couple areas if they don't go to the term sheet, and then ultimately to underwriting, and then ultimately to closed, which is the very tip of the of this wide funnel, which we'll track. It did not transact. It didn't happen. It was actionable, but then the seller walked away, or hey, we're looking at buying this company. We didn't win, or we didn't make it to the next round.
Any variety of
whatever.
Yeah, millions.
Or we passed.
Sure.
Or we lost. And those are not perfect categories, but that encompasses 90%. There's some times where we kind of passed, and then, or we communicated verbally, like I mentioned earlier, oh, we would do this probably at this pricing. So did we pass, or did we?
Your ask was too high, so did you pass? Because
did we
you
pass?
Didn't,
it's not really a lost deal.
Asking.
So yeah.
Right.
So, and then we want to look at the end of the year at our lost deals and say, hey, like, why did we lose? Is there something thematic about that? Are we chasing? This gets into the like corporate development side of BD. Are we chasing the wrong types of deals?
Have you ever found something thematic about why you all were losing deals?
Yeah, I mean, at times we kind of look at it and say, hey, we can look. We don't have tons of data points, but this is a private market, right? So there's not perfect information, but pricing on average of deals that we lost, and say we just can filter to, we track type of transaction. We can say that it's buyouts, right?
Yeah.
Okay, pricing is tightened 75 basis points on average for the deals at least that we lost.
Oh, interesting. Okay,
now,
so your pricing was out of market slightly, even from what you're looking for. Which
well, we're looking at the trend line. We're saying, okay, if maybe we've decided to come down a little bit, but if the whole market is shifting down, and so we can take the data that we have and sanity check it, but we can look at it year over year and say, yeah, that's in line with my my conversations with people.
Interesting.
Okay, wow, it seems like a good LBO and the size range that we play is now L550, and then you look at it over time and it's slightly depressing at times, but it is what it is. But that helps you be more informed. So, okay, do we want to do smaller LBOs since, cleaner ones in this range are, not really happening? Well, I don't know. Maybe we don't. Maybe we don't think that doing smaller ones presents good risk-adjusted return because the companies are too small, right?
Or you can't deploy enough capital, or
that, right?
Yeah.
If it's you do have those fun like kind of level considerations from a just size perspective.
Sure.
But then you can also look at it and say, well, or was it more there wasn't a lot of special situations, transactions in the market? You try to be as data-driven as you can.
Yeah,
it's never going to be perfect. Sometimes it's twofold, right? But that helps us inform, okay, well, this ARR stuff we're doing, the software stuff, we're winning 1 out of 10 term sheets there. Maybe we should spend more time there, right? or hey,
So I'm curious, what, like on a trailing 12-month basis, what is your under review to close ratio, or what, how do you think about that? Number of deals,
yeah.
People always say looked at, and I never know how to categorize that. Is that an NDA was signed, or you actually got the team to look at the sim, or?
Yeah,
or
we track like the very, very top line, which is like basically everything.
If
I'm on like a wide blast for like a broker on something that's a sell side mandate, like I don't count that.
Sure.
I don't even reply because I'm not private equity fund. But
Right.
everything else is like a deal.
Mm-hmm.
I don't know what better. I just don't want that much discretion in it. I think it's better just and the metric of
think
like
that's fair.
interesting.
It's a look.
Yeah, is interesting is we have a checkbox in the system that we can see how many term sheets we issued. So we'll see, it's gone up every year, right? Obviously being more thematic and me being more focused on it on a dedicated basis. And I've hired someone subsequently that also focuses on business development. We primarily just kind of go attack the market separately. So of course it's going to go up, right? And we just get more, kind of gravitas in the ecosystem, but we'll see like 1,300 deals this year or something like that, 1,400.
Wow.
We probably are like digging in on, I don't know, 300 probably, or 350. We'll issue 100 to 120, maybe even 125 plus term sheets this year. It's been, and then
That's a higher ratio than I would have imagined.
and then we'll close, I think this year we'll close at 8 or 9.
Yeah.
So it is quite the.
It drops very quickly.
Yeah.
Absolutely.
Yeah.
Wow, 1,400 to 8. It's amazing. That's what it takes, though. That's honestly.
Yeah, I mean, I wish. I mean, we all wish it wasn't that way, right? But I mean, I still think
But it's also the reason
Yeah.
it needs a specialized role.
and just sanity checking myself, right? I mean, I said the 10% here, and I back into my numbers, that'd be 140, which are probably like that win zone, and maybe you issue term sheets on a high percentage of those. Kind of sanity check my math earlier.
Yeah.
It really is like the 10%. It's a 1 out of 10.
Absolutely.
Right? And yeah, that's where we spend most of our time.
All right, let's go in a different direction for a moment. I think we covered a lot of the items on this list that I really wanted to cover, gave kind of a very good perspective on the role.
Yeah.
For people watching who find this really interesting, what advice do you have for getting into this role? How would you approach a group and kind of demonstrate that you have this skill set?
Yeah, look, I mean, it's obviously become a valued seat within a lot of organizations.
Maybe go back one more step.
Yeah.
What do you think prerequisites are to be good in this role? So, for someone watching this, what skill set should they have? And then how should they approach groups to kind of demonstrate that and get involved?
Yeah, sure. I mean, to start, you have to like it, which is I would rather go have 15 meetings in 3 days, which is exhausting in its own way, versus build a model until 2 in the morning.
Oh, yeah.
Right?
And there's different personality types that cater to one or the other.
Absolutely.
I mean, yeah.
So that's pretty core. Like, I don't know how much you can like teach business development, right? Now, that doesn't mean you have to be the most likable or the easiest to get along with. That's certainly not me, but you have to at least like it. Oh, you're going to burn out because you can be targeted or wide or all these things, right? But you are going to spend a lot of your day on the phone talking to people or trying to go meet with people in person and all the communication there and after, right?
Sure.
If you don't like that, then so that's probably rule number one, is just a personality,
Yeah,
right?
and I think it even goes a step further. I think there are people people who get energy out of it versus people who slowly feel themselves get drained.
Yeah.
And I've honestly struggled with business development. I've known I had to do it, and I've known I have to be sourcing and finding opportunities.
Yeah.
But if I have stacked meetings all day, I have a really hard time, and I am exhausted by the end of the day. And I've had partners who feel great at the end of the day and just want to keep going.
Yeah.
So I do think it's two very different types.
Yeah, I make sure to bring Mark with me to like one or two conferences a year just to, because it's
Remind him.
Yeah, and then he's like, I don't want to do this anymore, so I'm glad to have you. And so I think that's pretty core. I think two is some kind of at least a baseline or even actual experience in the part of investing that you're looking to work in.
On the transaction side or investment team side.
Is helpful, right? So
Yeah.
I would not have come in and I would have had a longer ramp up period at Elm Park if I didn't have some credit background.
Absolutely.
But it also ducktails to my story, right? I'm telling my story and I'm telling Elm Park's story. My story is, hey, I learned credit at Texas Capital. There's obviously a larger opportunity set here. and we can be more flexible, and that makes sense. But I can very much talk shop, right?
Yeah, absolutely.
If you want to talk about the Cowboys
I think
game,
is hugely important.
and that was
Right.
what works, great. We can talk about Cowboy game.
Yeah.
If you want to talk about why I don't have an accent like from Texas and I'm in New York, we can talk about my accent if you want, right? But if somebody wants to dig in and say like, what have you invested in like at Texas Capital or at Elm Park, and they're much more like transactional focused, like I think being able to do that is very beneficial, right?
I would agree entirely.
And so that was part of the role, or part of the role that was interesting to me was the ability to be specialized and focused on business development, but stay sharp on transactions, but not so much that I was taken offline, right? So I obviously have a view on the structure that's the best. Other people could disagree in different firms. Maybe they employ a different model. But I do
some
think
firms do employ different. I mean, you have firms that just cold call constantly.
Yeah, sure.
And the moment there's a hit, it passes to someone who has that knowledge and that background.
Absolutely.
But I do think it's a little bit more fulfilling when you can do both.
I like both, right?
Yeah.
Because by the time I get home from a trip or a calling effort for whatever new seam in the market we're trying to find, I'm like, I don't want to do that. I just anymore. And then by the time I like dig in on 4 transactions, I'm like, I don't want to do that. I want to go have lunch with you.
Yeah, right.
And then I think the third is thick skin in a lot of ways, right? It's not personal a lot of times, but everybody's marketing to somebody,
Right.
and most of the people you're marketing to, and in any seat, are not. It's not inversely their most valued meeting or source of flow, right?
Yeah.
So I'm calling on ex-private equity guys, also other lender, different people in the ecosystem. We're not just covering sponsors. We cover a lot of different people. But I'm mostly calling them for deals. And yes, they want to know who I am, but I'm not going to send them deals. And they're calling on somebody else, right? And so, people are going to, like we talked about earlier, going to sometimes change the meeting or cancel the meeting or not show up. Like if you get discouraged easily by that stuff,
Super tough.
or
You're going to
get
know a lot.
or get too, you can probably relate to this, get too like in touch with like a certain investment, and especially on the equity side, and then you don't
Getting
win it,
attached and then
take
it falls
first,
apart.
and it falls apart. I mean, like you just have to be like next deal.
Yeah,
and
absolutely.
Then my last one would be it's time management. I mean, that sounds a little bit cliche, but I think it's really fundamental skill of here's, at any given day, if you're a business development person, you're going to have a lot to do.
Yeah.
And there's not typically somebody or a partner on top of you telling you what to do, right? If you're purely like a new associate, you generally, on the underwriting side, you generally know, okay, like here's what I've been assigned and I need to do these 2 things and here's my deadline.
Sure.
There's a lot of autonomy on the business development side, but you're not going to, but if you obviously don't have self-accountability, you're going to kind of slack off. But you're going to have following up from the last trip. And here's this folder of people that I, need to follow up with for a call. And then I have this trip that's coming up. Or I also need to do conference research for next quarter. And, I also have one deal that's in underwriting that I need to kind of like check in on and see if I can be helpful. And then there's 2 term sheets out at the same time that, you need to think about how to play that internally and externally. And then you have 15 deals on the pipeline at various stages of interesting and not. And you get to your desk and you're like, what am I going to do today?
Yeah.
It's and tough. It takes you
when you're
time.
sourcing it, because you can spend time
You get
anywhere.
pulled in a lot of directions,
right?
That's why some people that I know they're more underwriting focused don't like doing BD because like it's really hard for me to then pivot back to taking a deep dive into data room for a deal we have under LOI when I've been doing 30-minute calls at a high level. It's hard. Like it's hard to balance that, right? Yeah. So I think time management, just prioritization becomes very crucial to like kind of your ramp period, right? You're not going to figure that out day one, but the more you're thoughtful about it and try to be data driven, the more you try to not just keep doing the same thing every week, month, year that you used to do. Really thinking about how you spend your time. Again, that's internally and externally. You're more likely to be successful. So
and then for people looking for this role, this isn't really like a role that has a hiring cycle to it at all. But once you find someone, you want to build the network you're talking about.
Yeah.
And there's a lot of value in that. If they leave, you lose, I think, a substantial resource. So when you think about someone looking for this role, and maybe the new hire you have is a great example, what were you looking for? What did you like about how they approached you? I think initially it's very interesting how you started. It was at a time where this was kind of more specialized, and that specialization was becoming more prominent in the industry.
Yeah.
Now that role exists. So if someone's trying to get in, What would you tell people?
Yeah, it's interesting. It probably varies on the credit versus debt side. But I see there's probably a couple trends, right? It's finding somebody that's pretty junior, who has, you think, the aptitude to do it, and then the kind of the desire, they want to go, and you see that more. I have more people reach out to me or get connectivity of like, hey, like I want to be a business development person. Like I didn't get introduced to 4 years ago. People are like, no, that's not sexy. I don't want to do that. I want to like build a model, which is fine. Like but it's become more valued in an organization. People know that, and so you have more people that are younger in their career that want to do it. So investment banking or commercial banking are always going to be a good feeder into it. Yep. And so, but yeah, I mean, if you want to be a business development person for a credit fund, the best thing to have done before is be an underwriter at a credit fund or a bank, right? That does some kind of similar transactions, because you have at least some exposure, and then you don't have to learn everything. You can kind of know the lingo and how the speed of a transaction, and
you don't really have the opportunity to learn everything. I mean, if you're brought into a biz dev role and you don't have that underwriting experience previously, and the way you're going to add the most value is by building a pipeline, you're probably not going to be sitting at a desk learning this skill set. I think right?
Exactly,
yeah.
Right? I mean, you obviously are going to read a bunch of memos and, sit on some calls, but it's not like people or any firms like, spend 6 months knowing our business in and out and then go generate your first deal. Like that, I mean, 90 days or 60 days is like, all right, good luck.
Yeah.
I mean, I'm pretty sure most places would be like that.
Prove it. Yeah, absolutely.
So, if you don't have the, that kind of direct experience, probably find a way to do it, or find some kind of like, I find when people are calling on me, if they're clearly passionate about business development and can tell me why, I'm more likely to try to give them connectivity to somebody that might be hiring for that role. Cause I'm like, oh, this person really actually wants to do business development. Cause what we always ask is, or somebody going to say that cause we have this opening, but then they really want to be an underwriter, and this is just their way in. And we're like, okay, well, it's not what we want. Like we haven't, it's not the role. So at times I've had calls with people that don't have directly relevant experience, but it becomes very evident, like, oh, this person actually really wants to do BD. Oh, wow, okay, that's cool. I didn't get that 4 years ago.
So as a final question, what do you like most about business development? What would you say to subscribers looking for this role that you admire most about it?
Yeah, no, look, it's, I initially liked it because my personality is very, very extroverted. I still get the exposure of learning about a lot of very interesting companies, different business models. It's very intellectually stimulating, thinking through at a high level, like, do I want to push this up to the next level internally? Like, I like that daily triage of opportunities. And I think over time, the importance of the role within organizations becoming more valued has also been beneficial to me, right? Like it's nice to kind of see that evolution just in the ecosystem and how people source, right? And I think that is natural, just given the competitive dynamics within private markets and equity and credit and venture and kind of across the board. So I've enjoyed seeing how it's evolved, but I enjoy most getting a lot of exposure to people, types of businesses, and I think I'm always kind of learning something new. Right? I can talk to all kinds of random industries, and you get the most of that being on the front lines, being the kind of top of the funnel guy.
Yeah, absolutely.
Right? So I enjoy that.
No, I think it's fantastic. I think that's similarly, it's the narratives you're exposed to, the stories, the strategies. Every time you speak to a different private equity fund, there's a different investment strategy. You speak to an entrepreneur, story about how they built the company.
Yeah.
It's
and then
absolutely fascinating.
Other lenders of what they're doing and how are you kind of going to market. And then there's all these other weird seams and trends in the market that maybe we can go into in another, another day.
Right. It's
that you get to kind of
what's happening.
Yeah, you start to get to think about, do I think that there's a risk-adjusted return in this new seam? And I like thinking about that go-to-market for the whole firm and not just for myself.
Yeah.
Because ultimately, for smaller teams especially, one team, one dream, right? So you kind of get all of that mixed into one role. I was like, well, that's kind of perfect. And I really enjoy it.
Awesome. Well, Brian, thanks for coming on.
Yeah, man.
Really appreciate it, bud.
Yeah,
Yeah.
sure.
Do it again sometime.